Hello pro traders, I'm here with another interesting video about forex. So this is a video of much anticipation, a video that I've received a lot of information, a lot of messages into my DM requesting or asking about this particular video. Obviously, I've mentioned a few candles in one or two of my videos, so there was a need for me to actually explain what FU candles are. So we didn't take much of time. Let's get straight into the video trying to understand what FU candles are. FU candles, by definition, we are saying we are looking at a two candlestick pattern. The first candle, of course, which will generate liquidity, and then the second candle, it takes the buy side or the sell side of the previous candle that generates the liquidity and then obviously break structure. Don't get confused with the definition. We will actually do an illustration for you to understand what I'm saying. But before then, what I do want you to consider is that, or what I do want you to understand is that we have simple FU candles and then of course advanced FU candles. Now the advanced one, well, I can say with experience you will be able to identify them, but the simple ones I will try as much as possible to let you know how they are really formed on the forex market. So let's use this simple image here and then try to understand the concept of liquidity. So by definition, we are saying we are looking at a two candlestick pattern. The first candle, of course, which generates the liquidity, then the second candle which takes the sell side or the buy side of the liquidity, then it obviously break the high or it breaks structure. Okay, so what we are looking at, let's look at these two images right here. So we have this candle right here, the first candle. Of course, we generate liquidity. By definition, we know, right? Now, why does it generate liquidity? Obviously, this is an indecision candle, right? The market doesn't really know where it will make its next move, or that is what we all know from when we started learning forex. Now the second candle, which is this green candle right here, you can see you can see it actually wicked below this sell candle right here, then it broke the high, right? It broke the high, or it actually broke structure after it has taken the sell side of this doji candle right there. Then we consider this candle right here, the bullish candle here. We consider that candle as an FU candle. Okay, so this is our FU candle, not the doji candle, right? Now let's consider this same example. We can see the indecision candle here, bullish hammer, whatever hammer you think it is. All I want you to know that it generated liquidity. Once it generates liquidity, then we have the second candle. It took the low, that is the buy side liquidity, then obviously broke the high here of the first candle, where it actually broke structure. Now this candle here, right, the big one, is our FU candle. This is what you should know for starters. This is what you should know when it comes to FU candle. It is as simple as that. So first, when you are looking for FU candles, you are looking for areas where we can actually observe liquidity. So liquidity in the form of doji candles, liquidity in the form of double tops or double bottom, liquidity in the form of a resistance zone or a trend line. Now when you observe these liquidities, now you try as much as possible to identify the candle that actually takes that liquidity that has been generated and then obviously break structure or break the high of the last candle that generates liquidity. It is as simple as that. Now the advanced ones, I'll point them out once we get to real-time chart. Okay, yes, let's use this image and try to understand something real quick before we get into real-time chart. Now we are here, right? This is double top, right? Double top, which of course generates liquidity. Why does it generate liquidity? It generated liquidity because we have retail traders who believe that once we have a double top or we have a level that price keeps bouncing off from, it becomes a zone of much interest or a zone of resistance. So what do? Once they see such pattern in price, they try to take the trade and place their stop losses right above or below the zone. So in our case, a double top, retail traders will place their pending orders right here, right? Either right here or no, maybe slightly below the zone. Then their stop losses are right above the zone, somewhere around here, right? So what we do know is that before an FU forms, we are looking at the candle that will actually, take away that liquidity somewhere here. Okay, let me just do away with it. So the candle that will do away with all their liquidity, it will actually take their liquidity in the form of liquidity sweep or liquidity grab, then obviously break structure to the opposite direction, okay, or break the high or low of the previous candle. It is as simple as that. That is how we define what an FU candle. So I use this image for you to understand that we do not only have FU candles that form to the bullish direction like I did showed you, right? So we can have, a sell side or a sell setup. So in this case, this is the sell setup. We actually look at how we enter with regards to FU, but I do want you to understand the formation first. So here we have FU here. Why? Because we have doji candle, the second candle wicked below it in the form of liquidity grab, then obviously break the high, right? It break the high of the previous candle that generates liquidity. Then of course you can see the doji candle right here. Then the next candle breaks the high and then swept the liquidity. That is it for simple formation of FU. So once we are in the forex market, look for liquidity point or liquidity zones, then look for the candles that swept or sweep that liquidity zones either to the top or to the down, but obviously breaks structure of the candle that generated the liquidity. Let's get to real time charts. All right, fast forward, we are on the daily time frame of gold. Let's try as much as possible to identify these FU candles. Okay, so with the purpose of the video, we are on a clean chart, but just by looking at price right now from this bearish move all the way to here, we can actually see an FU candle right here. Okay, why is it an FU candle? We have the indecision candle, which is this red candle right there. Then we have the bullish candle sweeping the low of the liquidity, the low of the first candle which generated liquidity, then obviously breaking structure to the upside. What did we see? When price actually returned back, it never broke the low of the FU candle right here, as you can see. Okay, so yeah, that is how FU candles are that powerful, right? Then we can talk of this advanced form of FU candle right here. We actually saw that the liquidity was generated with this bullish candle. Now the red candle swept the sell side liquidity, then eventually it didn't break the low of the first candle that generated liquidity right here. Okay, so we say that this is an advanced one because it doesn't really follow the basic definition of FU candles, but with experience you have to, or you know why it is an FU candle. Okay, then we can talk of a very practical one right here, right? You see the doji candle right here. Okay, generated liquidity, a sweep to the top of the liquidity, then obviously breaking structure. Practical one, of course. What do we see? Price obviously returned. It never broke the high of the FU candle. Then we have a big drop to the downside. Okay, so that is how powerful FU candles are. One, they are used for entries. Two, they are used for market direction. Yeah, so let's try and identify more of FU candles. Okay, so yeah, we have this one there. I spoke about it. Yes, a very practical one here too. So we have the first candle which generated liquidity, and then of course the second candle swept the liquidity to the downside and eventually broke structure or the high of the liquidity generated candle. So that is an FU. As simple as that. What do we see? Price retested the FU and then gave us a bullish movement. But you can obviously see there is one here which actually got filled. It didn't really work out. We have the candle generating the liquidity, then the bullish FU candle. But then when price returned, it actually smashed through. Yes, it happens. That goes to confirm the principle or the principal rule in forex that there is no holy grail in the forex market. So yeah, it does fail. I'm not saying this is eventually a magic for you, but when you look at it, it will actually give you an upper hand in terms of market direction and analysis. Very nice one here, of course. We have two candles generating liquidity. This bullish candle here just wicked below, taking liquidity, and then obviously break structure. What do we see? Price never returned. It just rallied up and up and up until we are right here. So yeah, FU candles are thus powerful, right? We have a very interesting one right here. When price generated liquidity, we have the bullish candle, which forms the liquidity. Then what do we see? Price return and then gave us the retest of that FU candle. Okay, that is how powerful FU candles are. If you actually know how to use them, you will be fine on the forex market. Okay, this is an advanced form of FU candles. Why? Because we have the first candle generating liquidity here. The second candle actually swept the liquidity, broke the high or low of the candle, but obviously the second candle too was a doji candle. This is an advanced form. By experience, you will learn about it. Just know that we have advanced form of FU candles. Okay. So yeah, that is what we use FU for. One, for market direction. Two, for entries. And my next video will focus on how we use FU candles for entries. So we have the liquidity candle generated right there. Then the candle wicked below. It never broke structure. Advanced one. Then the retest. And then price continue to rally up and up and up. Right. So yeah, that is it. Powerful FU, and that is how they are formed on the forex market. This one right here, of course, see the red candle generating liquidity, wick below it, rallied up, then we saw the retest. Okay, and then price gone back very nicely and then detailed. Okay, that is how if you are obviously formed on the forex market. Okay, so the idea is that try as much as possible to always identify liquidity in the form of double top, liquidity in the form of doji candle, liquidity in the form of double bottom, trend lines. You are good. Once you are done, then you wait for the candle that obviously takes that liquidity, break structure or the high or low of the candle that generated liquidity, or the candle that swept the resistance zone, the double top. That is your FU candle. One is used for market direction, so we have bullish FU candle and we have bearish FU candle. Two, we use it for entries. My next video will focus on the entries.